Hello and welcome to today's property breaking news. As you know, we aim to keep you updated with all the latest developments in the coronavirus crisis and how that affects us as property entrepreneurs. The government have announced that buy-to-let mortgages will be eligible for the 3-month payment holiday. To discuss all that and exactly what it all means, I'm joined today by Akhil Mair. I won't shake your hand, I'll just do a sort of fist, whatever it is that we're asked to do these days. Akhil Mair is a friend to this channel. He's a mortgage and financing expert. He runs an organisation called Our Mortgage Broker. Details and his contact details are in the description below. He's been a friend to this channel for a long time. You can see some videos that I've done with Akhil on buy-to-let mortgages. Now, if you're new to this channel, you're coming here for the first time, we release content each and every week. It's all dedicated to helping you be on top of your game in property and be a more successful property entrepreneur. During this coronavirus crisis, we are releasing regular updates under the property breaking news banner to keep you updated with exactly how government policy translates to facts on the ground in terms of how it affects property entrepreneurs. This is information you need to run your property business, so make sure you subscribe, smash that bell icon as well, and you'll be notified as soon as we upload. Also, like us, it really helps us out on YouTube. Enough of me. Akhil, thanks for coming down.
Good to be here again.
I spoke to you yesterday and you mentioned to me that you'd been in touch with a lot of the lenders, and I suggested, look, come into the studio, let's have a chat, let's share this information, because I wanted to find out what was going on for myself, for my own property business. So I thought, well, okay, rather than just me have this one-to-one conversation over the phone, let's ask you in, let's do it in front of the camera so that everyone else benefits from the latest news you have from the coalface. So tell us, the government have given a 3-month payment holiday for buy-to-let mortgage holders. What does that mean?
Well, what does it mean? It's new news. It's just come out as of yesterday. What it means in short is lenders are now giving landlords and homeowners a holiday for up to 3 months. Restrictions do apply, terms do apply. It's not one rule fits all.
Can you define holiday?
Sure. Well, there is no such thing as a free holiday nor a free lunch. So what that means in short is you have to contact the lender directly. What the lenders have said is if you are up to date with your payments and you are directly affected by the virus or because of your tenants and you can't afford to pay, they will take a view on it. So it's not a view that everyone will get the holiday for up to 3 months. It's dependent on individual circumstances.
How do you, this is an interesting point that you raised, how are you meant to demonstrate that your tenants are affected by coronavirus? Because people have been asked to self-isolate at home and they've been asked not to go to GPs, so they haven't exactly got sick notes. There's no document, I mean, with mortgage companies, it's all about documentation and paper evidence. There is no paper that I can produce to say, hey, my tenant is self-isolating. Yeah. So do you know how that's going to pan out?
To be honest, I don't. But what I would say is you'd have to refer back to your tenancy agreements. Mm-hmm. And tenancy agreements, I think, are key, and your reference checking. So you'll know if, for example, Joe Bloggs lives in your property, he works for one of the high street brands that have closed down,
yes.
For example, TK Maxx.
Yes, they just shut down today, yeah.
So if you've got a tenant in one of your HMOs, for example, that works for TK Maxx, you know it's real, it's real time, and then you can convey that message to your lender.
Okay. So, there may be some kind of evidence, and I guess as landlords, I mean, what the government have said is that we should work with our tenants as landlords to come up with a payment plan, because it's not a rent holiday either. Mm-hmm. The rent is just, it's a deferment, is probably a better word. Yeah. And you would come up, they would have to demonstrate, I guess, to their landlords that they are working for, say, TK Maxx, where they've right. shut down, or they are affected by self-isolation or something like that. And that's the information you pass on to your lender.
Yeah, listen, this is unprecedented times. No one could have ever dreamed of this happening. So we've got to work with everyone around us. That counts our tenants, our families, our lenders, our borrowers, and so on. So we have to all work collectively and do the right thing. So I think in today's times, we are every hour of the day, things are changing and they're moving so quickly. All I would say is make sure you've got open communication with the tenants, with the banks. If you think you are going to come into hardship over the next coming months, the landlord should speak to the lender to say, these are the issues, this is what I'm going to find. Can I get a holiday, payment holiday for 1 month, 2 months, or 3 months?
Okay.
The key thing I would say is when you do get that confirmation, have it in writing, record the phone call, date and timestamp who you spoke to.
That is a handy tip.
This will come back to, hopefully not to bite you, but we don't want adverse credit reflected on the credit reports.
That is a fantastic tip, because you need to, because sometimes lenders in the call center, they won't give their full name, they'll say Sue or whatever, so you have to ask what team they're in, and you have to have some audit trail of who you spoke to and who gave you what advice.
I agree, yeah, because they're getting thousands of calls every day. So yeah, do yourself a favor, document it, and tomorrow at least you've got some backup evidence.
So, okay, you've got up to 3 months payment deferment at the moment. Your interest is going to be rolled up and charged at some point.
Yes.
Can they charge an arrangement fee for giving this facility?
Most of the UK banks have said no, they're not going to charge any admin fees, which is great to hear. Things are ever changing. I doubt they will make any admin fees for this issue. But I would say speak directly to the lender, because every lender's got their own appetite and criteria.
Okay. And what about people who have got old Mortgage Express loans, which are technically government loans? I mean, are they implementing government policy as it exactly says on the tin?
I'm sure they are. I think the government are now working for us, the consumer, at the end of the day. In 2008, they backed the banks. Now they've got to back the landlords and us as consumers and borrowers. I think they are making the right steps. The Chancellor, Rishi Sunak's doing I think, a great job with the cards he's been dealt with. And who knows what's going to happen tomorrow. So I think just work collectively, work openly, and have a good communication channel with everyone involved.
Okay, so we've talked about buy-to-let loans. Now, some people have got commercial mortgages, and the wording so far that the government have said, they're talking about homeowner loans, mortgages, and buy-to-let loans. So if someone, say, got a 10-room HMO and they got a commercial mortgage on it, has that been brought under this legislation or these new powers, or is it on a bank-by-bank basis?
Okay, so when it goes back to the 3-month payment holiday, the high street residential bank lenders have said that they're going to warrant up to 3-month payment holiday subject to circumstances. When it comes to commercial lending, so whether you own a retail with flats above, it is subject to commercial lenders' appetite. Now, just coming into your offices this morning here in St Albans, I spoke to the head underwriter at Shawbrook Bank. As of yesterday, their stance was they are under review. Things changed overnight, and as of this morning, they have now come back to say they will take a view and offer up to 3 months payment holiday for their commercial clients. And it's exactly the same, replicates what the high street banks are doing. It is dependent on circumstances, whether coronavirus is directly affecting you, and have you got a good credit profile, is your payment history up to date, and then they'll take a view from there on out.
I mean, of course, the other likely scenario is if the landlord themselves falls victim of the virus and they have to self-isolate. That must be an issue too.
No, I totally agree. And I think we should all take precautions, right? So we've got a good distance between us, which is nice to see. Just do what the government are saying. Don't shake hands, don't go into mass gatherings, do the right thing, and we should all stay safe that way, I should say.
Now, what about the impact on the landlord or property investor's credit file? Is there any guarantee that, when this whole crisis blows over and we've taken a 3-month mortgage holiday, that we aren't going to have missed payments on our credit files, which will affect our future borrowing ability?
Yeah, it's a valid point, and it's imperative that these payment holidays don't get reflected on your credit profile, because tomorrow when you want to borrow money or remortgage or purchase a new property, you don't want that to adversely affect you. So it goes back to when you're applying for a payment holiday, note down who you spoke to, date and time, rubber stamp it, and ask them the question, is this going to have an adverse effect on my credit report?
Yeah.
Now, as mortgage brokers, we get these calls, as you can understand. The last few days we've been inundated with calls, and what we do is give back to our clients, and we will speak to lenders directly to see where their stance is. Now, the up-to-date information I've got is with most of the core lenders that we deal with, they've said that they're not going to have adverse or penalise their clients or their borrowers on their credit reports, which is great to see. But all I would say is when the client wants to create this arrangement for a 3-month holiday, for example, date stamp it, get it in writing, and then you can have it on file. Because tomorrow, whether it's Experian or Equifax, put an adverse credit marker on your file. At least you can say, or you can go back to them and say, no, I spoke to Joe Bloggs, date and time, and they said, no, this won't happen. Here's it in writing. And ask the lenders for something in writing. I'm sure they can arrange something for you if necessary.
Now, I mean, we've talked, like in my last video, I'll put a link up here, we talked a little bit about analysing the risk profile, if you like, of your existing tenant base, because some people aren't as affected. If you have tenants who predominantly on housing benefit, then that is pretty much guaranteed. If you've got people who are working in sort of non-retail, non-hospitality type of sectors, then they're only affected if they've got the sort of issue. So there are lots of people whose tenant profile is simply just not affected so much by this whole issue. And of course, people with smaller portfolios or people who are looking into getting into property, of course, all this uncertainty, wherever there's uncertainty, there's opportunity. If you've as long as you've shored up your own personal income, there's often sort of opportunity, but you can only go for those opportunities if you can get finance. So are people, what's the bank's attitude to people applying for buy-to-let and bridging finance to finance property deals today? Has there been any change in lending criteria?
So what's happened in the last couple of days is the appetite still remains open, banks are open, lenders are still underwriting deals, valuers are still going out, and solicitors are still conveyancing. What I would say is, over the last 24 hours, I've had a numerous amount of emails where lenders are pulling out of high loan-to-value interest rate products.
What is high loan-to-value?
So what we've seen is, for example, Keystone have now withdrawn the 80% buy-to-let rate. Kensington have pulled out on numerous buy-to-let and residential mortgages, 85% and beyond.
Okay.
So every lender's taken their own stance to look at their own appetite and how leveraged they are for borrowing and against loan-to-value against properties. Whether they think the property prices are going to drop, who knows? But they've taken the view, and hence why they've reduced and taken products off their shelves, if you like, for residential and buy-to-let borrowers.
Okay, and of course there are a number of auctions coming up towards the end of the month. Many of the auction houses, for the first time, have said all the sales are going to be online.
Yeah.
So that will, and online means that you have to pre-register basically. So it kind of takes out all the impulse buyers who just turn up on the day.
Yeah.
So that must have an effect. So there could be some opportunity, but is there the availability of bridging finance, say, if you want to buy something in today's market?
Yeah, no, I totally agree. I think it's business as usual for numerous amount of lenders. So whether you're buying a residential mortgage or a buy-to-let or a commercial mortgage or even short-term finance such as bridging loans, they are definitely open for business. And again, prior to coming here, I had a client wanted to find out a bit more about bridging. Is it still open? And I spoke to Together Money, and they said it is open for business. They are 100% still in the business for lending to bridging loans. So I'll say it's business as usual. Do the right things from the health perspective, but again, don't stop running your businesses, whether you're running a portfolio and so on.
Okay, so we've just had a monumental drop in interest rates, 0.1%, the lowest since 1694. It's a record low. But myself and many buy-to-let people I know have taken 3 to 5 year fixed mortgages. They've been very popular. Is that your understanding? And they don't benefit?
Yeah, it's unfortunate they don't benefit with these rate drops by 0.6%, which we've seen. We've now gone to 0.1. So we've seen a massive drop in the last couple of days. Unfortunately, the fixed rate interest rate holders, they don't see that drop in interest rates because their rates are fixed. And as you've all quite rightly said, especially in the buy-to-let space, a lot of our clients we've seen have taken up 3 and 5 year fixed deals. And there's a couple of reasons for that. The biggest one is the security of payments for that duration of time. And the other thing is a lot of the buy-to-let lenders stress buy-to-let rates and borrowing levels at different levels when you borrow at 5 year pay rates. So there's lots of advantages there. But it's unfortunate that they don't benefit from those rates. However, those that are on standard variable rates and have mortgages that track the Bank of England base rate, they will definitely benefit. We've seen a number of lenders in the last couple of days that have rolled out reduction in their rates for their standard variable and tracker rate clients, which is nice to see. And I think while time passes during March, you'll see a lot of the banks passing those rate reductions onto their clients during the month of April and May, I would imagine.
Okay. And finally, I guess the remortgaging market. I mean, many people will have properties, perhaps they've got some equity in there, and they may want to simply remortgage to get in a cash position, to shore up their position and all of that. Is it still business as usual as far as remortgaging as of today?
Yeah, no, I totally agree with that, Ranjan. I think the market is very buoyant in terms of the remortgage market. We are at ridiculously low interest rates at the moment. It is a no-brainer to borrow money from the lender. But what I would say is, do your math. Don't just borrow it for the sake of it. Do your math. Are you going to invest in property? Are you buying the property at the right price? What are you doing with that money? And as advisors, we advise our clients to do the right thing. We caveat everything that we do. We ensure that they're doing the right thing. We manage their monies, and we help them along the journey. So we don't just do it for the sake of doing it, and we don't just do it on an execution basis, because we like to work with our clients and make them understand why they're doing something. We live in a world at the moment where things are changing hourly, daily, weekly, and we've got to be conscious of tomorrow's market and where we're heading. So I've got part of our business at our mortgage broker is we work with key people in the business. So we've got chartered surveyors, chartered architects, chartered accountants, and they play a pivotal part in our relationships with our clients. So again, it's how we add value to that client and where we can really value add, because it's these times that we live in today is where these personnel really get involved and help that client over this sketchy period of time that we're going through at the moment.
Okay, brilliant. And finally, on remortgages and new rates and everything like that, do you see, I mean, these are record low rates, do you see lenders actually offering new 3-year and 5-year fixed rate products to reflect this historic low rate?
I don't think they will. And I think the reason why I say that is they've got to make a margin on their spread as well. Because remember, the banks are lend to you, but the banks are borrowing from the central banks and international banks as well. So they've got to take a view on that. The US likewise have reduced their rates at ultimate lows. The Bank of England have done the same as well, but they look at the 5-year swaps. A lot of the international and treasuries look at international borrowing levels and how they borrow from one another. So they're monitoring LIBOR, they're monitoring SONIA that's coming into play in 2020 and 2021. So there's lots of other things, fiscal, economical, that happens in the background. But what I would say is, I think banks are squeezed and they're up to their eyeballs at the moment with borrowing. They are in the business to lend, but again, they can only do so much. But what I would say is there's lots of opportunity for consumers and borrowers and portfolio landlords to take up borrowing, but do it in the right way. And it's all about what you're going to do with those monies. Now, auction houses prior to the coronavirus were buoyant. They were 85% sold.
The post-election bounce was just massive.
And I don't think I'll ever say this, but I actually miss Brexit. If you look at coronavirus, I actually miss Brexit, because Brexit is a walk in the park compared to where we are now.
Yes.
But if it's not Brexit, it's coronavirus. But what I would say is, I think we will get over this, no doubt. You can't put a timescale on it because it is a health issue, unfortunately. But I think we will. But I think the strong will survive. But you just got to persevere and just do the right thing.
I think there's some good messages there. Great final sum-ups and thoughts, really. What it's about for existing property owners is to just really have a full grip on your cash flow. Know what your expenditure is and know what your income is coming in, and make sure you've provisioned for any shortfall if there is going to be anything. You've got to shore up your existing position before you can look at any sort of opportunity. And it's a sad situation, but the fact of the matter is that before we went into the coronavirus crisis, there were many people who were already in a weak position, business models that weren't working, businesses that weren't working and everything like that. And for those sort of people that weren't strong going into it, they are going to suffer the most by the economic uncertainty. And that will create property opportunities. And it's just about being ready, both in terms of knowledge, both in terms of your own position, and both in terms of access to opportunity to kind of go for those at those times.
Yeah, I think it's valid points, and you've been through so many ups and downs since investing in property over the last sort of 30 years and so. But what I would say is now, if you haven't done it, now is the time to look at your business plan.
Yes.
Those of you that are investing in short-term lets, you may need to review that, because the uncertainty in short-term lets is going to be phenomenal at the moment. Those guys that are investing in Airbnb lets, short-term service accommodation, my point of view is, personally, is I would say, look at those, shore up long-term tenancy agreements, 12 months with professionals, families, corporate lets that you may want to avoid, and so on. These are my personal points of view, because at the end of the day, you want good covenants, good tenants in your properties that pay you a reasonable market value rent rather than going for those huge rents through service accommodation. You may want to just pull back on that for these periods of time.
Yes, I mean, I would echo that, and I would also go further to say that this is not a time for doing anything for the short term. You know, short-term flips or short-term lets or whatever it is, anything with short-term in it ain't the right strategy. This is a time for making decisions for the long term.
100%.
And the people that do that will come out of this in the most healthiest and strongest position. So anyway, Akhil, thanks very much for coming down.
Pleasure, thanks for having me.
And giving us that valuable update. That's it for this edition of Property Breaking News. Join us in the next bulletin. If you haven't already done so, you have to subscribe and hit the bell icon if you want to be kept informed of the latest updates affecting the property sector because of this coronavirus thing. And also, you want to join us at Baker Street Property Meet. While the coronavirus restrictions continue, the Baker Street Property Meet, the UK's largest property networking event for property entrepreneurs, continues to take place. We're doing it online. Check out bakerstreetpropertymeet.com for registration. The next event is completely free to register for. We've got more than 450 people already registered, so join us on Thursday, 26th of March is the next one. Bye for now, keep safe and keep investing and keep profitable.
Thanks.
If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing.